Good morning, everyone, and welcome to another episode of the Crypto Hour. Today is Friday, the 4th of April. And first of all, I wanted to go and have a look at the economic calendar, and especially have a little chat about what happened with Trump's tariffs announcements. And then we'll have a chat about a few things, but also I wanted to, if Jonathan is okay about doing it, to carry on a little bit for at least 10-15 minutes on the discussion that we were having last week on the how to do things on the blockchain. Because we didn't have time, quite as much time, to go into how to do things like complete a contract like we would do in real life, but on the blockchain, and what extra security that allows you to do. So it would be nice to do that as well, a little bit, kind of midway through this hour. All right, let me share my screen. Okay, let's start with the economic calendar. On the right week, yeah. So this week we had the Australian interest rate decision. That as you know, guys, you guys are in Australia, has been kept at 4.1%, so no change there. And the rest of this week, apart from the Trump's announcement, which came on Wednesday evening in the UK, so roughly at like 4 p.m. New York time. The rest of the week there hasn't been that much, apart from CPI in Switzerland, that is where the inflation has actually gone down to zero now, month on month. So there has been no increase on inflation in Switzerland compared to the previous month, continuing the trend of lower inflation rate. And Switzerland is also the country that has lowered central bank interest rates more aggressively, going from 1.75% to now only 0.25%, becoming the country with the lowest interest rates, even beating Japan, is now at 0.5%. Okay. So we'll talk about President Trump in a second. Today, we have another very kind of big announcement, which is the non-farm employment change, which generally does move the markets quite strongly, especially if the announcement is different from the expectation. Now, obviously, it's a lagged indicator. So we're talking about what happened in the previous month. So, to wait to see the impact of Trump's tariff announcements, we're going to have to look at the announcement of the next few months. So this is what already happened before Trump had made his announcement. So in any case, always you see here we got the previous month, 151,000 jobs added to the economy. The expectation is lower, 137. If the actual number is considerably different from this, either better or worse, and the markets will react and adjust almost like by magic immediately. And then we also have later on the Fed chair Jerome Powell speaking at about 4:30 UK time. So it takes 5 hours away, so that's 11:25 New York Times, and obviously the non-farm employment change is at 8:30 a.m. New York time. Okay, so what did Trump announce? And that kind of like, if you invest at all, if you got stocks and shares or any type of investments, you would have noticed like a tsunami hitting your account over the last few days. Now, what everybody was waiting for was this announcement on Wednesday, because nobody knew exactly how these tariffs that have been widely announced would then take shape on what President Trump has called like Liberation Date. Now, for somebody that's kind of like is quite interested in numbers and studied economics and things like that, seeing the president of the largest economy in the world impose measures that seems to be done pretty much like on the back of an envelope, and something that like a fifth grader would have been able to do better. It's beyond the pale, honestly. This is, apart from being kind of like embarrassing, it's something that it's even more embarrassing to see, especially on social media. All our American friends, they actually believe what President Trump is saying, because literally it doesn't stand up any scrutiny whatsoever. So what he has actually done is announced like wide-ranging tariffs imposed on different countries. And his discourse is like we're imposing reciprocal tariffs. So other countries are imposing tariffs on us, we're imposing it on them. Now, this is the first huge lie, okay? Because that's not the base of his tariffs whatsoever. What is done is a very calculation. This is what I'm talking about, like a back of an envelope calculation. So he's saying, okay, how much is country X, let's say Vietnam, okay, how much are they exporting to the US? How much is the US exporting to Vietnam? That difference, what we're exporting less what we're importing, is either a surplus or a deficit. So a trade surplus or a trade deficit. Okay, so obviously the US is a net buyer in for the majority of countries in the world. So it will have a deficit because it imports more than it exports with most countries. And then they divided this deficit by the amount of imports from that country. And that will give you a percentage, obviously, because it's like a part against the whole. Okay, so it will say, for example, I don't know, Europe exports to the US, I don't know, let's say 10 trillion. We export to Europe 5 trillion. So let's divide, the deficit is 5 trillion. Okay, then let's divide 5 trillion by the amount of imports that from Europe to the US, which is 10 trillion. And so that ratio is 50%. Okay, and then we impose as a tariff half of that. So this is the calculation, which is honestly, it's unbelievable, unbelievable. And as a result, it's caused huge uproar. And because everybody is seeing that this will cause a lot of pain across the world. And let's have a look at how that measured. So let me see, what am I here? Oh, a 15-minute chart. So this is, you can see, when you imagine that the President Trump was speaking, okay? So this is the effect of his speech. Okay, you can see here at 9 o'clock, so it went, this is the NASDAQ 100. Actually, let me just change from this. Let me just change slightly, going to the futures. Okay, so this is the NASDAQ 100. As you can see up here, this is Wednesday evening. Okay. Started at 9 o'clock, and the end of the biggest drop was by 11 o'clock. So in 2 hours, we went from 20,000 to 8,800. So a 6% drop within 2 hours. It's massive. And since then, the market has struggled, has dropped a little bit more. So if we measure from, let's say, where were we before the announcement? Actually, it wasn't as high as this, but before announcement, we were here. This is exactly 7 o'clock. At the moment, we are standing at a 5.8% drop in the Nasdaq. And this is, just remember that 25% is a bigger move for a whole year in stocks and shares. You can imagine 6% is this is what the market thinks of the announcements. Kind of uncertainty and obviously big more costs of trading across the world. And it means that less trading happening between countries. Whatever you think, if the long-term effects will be of bringing manufacturing back to the US or not, the reality is that at the moment that manufacturing capacity doesn't exist in the US to replace what they import for the rest of the world. So even if this policy was to work, it would take years to see the effects of it. But so this is the Nasdaq 100. For example, if we can have a look at the what's the S&P 500 is where are we? Similar thing. So this is a regular trading hour. So the drop happened after hours. Let me go to the electronic hours to show you. So again, so this is why the reason that sometimes the announcement happen at certain times is because there is the trading in the regular market stops at certain times, but it carries on at the moment. The trade is 24 hours a day, 23 hours a day, especially in the futures market. So it doesn't really matter if the drop happens during the US hours or during the time when the US market is closed. So you can see here, that's again in the S&P 500, a 5% drop, again in the same like 2 hours time span. And where are we right now? Kept dropping. So that from the time of announcement again, so a similar thing to the Nasdaq, 5.5%. Okay, now in terms of the other thing I wanted, so obviously this has caused drops in other markets as well, as we're talking about the crypto hours. The same thing happened to Bitcoin. Now, if you can start seeing a difference now. So this is the drop, obviously, in a couple of hours again. 7%. Bitcoin generally is more volatile than the stock market, so it moves a bit more. But a nice difference is that while the stock market has kept going down, Bitcoin has actually now decoupled and it started to go back up. So at the moment we are standing at -3% from when the Trump started talking, where the stock market and both the Nasdaq and S&P 500 are between 5 and 6% drop. But in terms of what do we do going forward, we need to consider do a little bit of comparative analysis now. Sorry, before that, let's just have a look at gold first. This is a long term. I'll go for 15-minute chart. So the gold is slightly hasn't really paid much attention to that. There was a drop as well. What was that, Wednesday? So this is again, this is the time of the announcement. Okay, so gold at the time of the announcement didn't really do very much. It actually went up. It went up by 1%. But since then, gold was pretty much an all-time high and is dropped slightly as well. So it's now like 1.7% lower than it was at the time of the announcement. Because the purchase of gold in a way happened before the announcement, where people are trying to protect themselves from whatever could happen, whatever could be announced. And by now, it's even if is as bad as it comes, what's been announced, at least now people know what they are planning to do. Now, passing now from a short time, like 15-minute chart, going to a much longer one, going to a weekly or a monthly chart. The idea is, when you have a portfolio of investments, it's always all the time is thinking, okay, should I move my funds from one asset to another? Which one is performing better? And if we look at over time, I've got this comparative ratio here at the bottom that I'm going to show you in a moment. We can compare different assets to the S&P 500 to see over time which one has performed better. Now, if we look at gold, for example, gold is a defensive asset. We look at a very long-term chart. So we see gold as, from the 70 when it was worth like $90 an ounce to today where it's worth $3,000 an ounce. Okay. And there are times where gold hasn't really done much, literally between, 1982 and 2003, gold hardly moved at all. Okay. And times when it actually grown very strongly, times when there is more uncertainty. We can see between then 2008 and 2011, he actually jumped from $400 to almost like 2000. And then recently, in 2000 and, from the pandemic and 2022 and 2024, again, almost like end of 2022 till now, pretty much like doubled in price again. But if we compare it to the S&P 500, which is the bottom pane, and I'll make it bigger so you can see. So this is a ratio between the two of gold divided S&P 500. So if the ratio, so it's just imagine this is it's like a fraction. Okay, so we have gold here. Okay, and we got the S&P 500 here. So if this ratio, if the ratio is going down, means that the S&P 500, so the shares are growing faster than gold. If this ratio is going up, it means that gold is going up faster than shares. So it tells you something quite immediate to the naked eye, is that from 1981 to pretty much 2001, you would have been much better off being invested in shares rather than gold. Then, from 2001 to 2013, which is like the secular bear market in shares, the investment in gold would have yielded more than investing in shares. And then again, between 2011 and the present day, shares have performed much better than gold, to the point where the index is going from, the ratio is going from 1.5 to 0.5. So shares that would have done like 3 times better than gold over this time. Now, the interesting things though is to see, you can see now this is starting to, it looks like this ratio has bottomed out and started to turn around. And this is not just for gold, but for different asset classes. So that can indicate, so when can we see actually, the downtrend in the gold share ratio has now terminated and is turning around. So going from a downtrend to an uptrend, we will need to see break this point and a weekly or a monthly closure about this point for saying yes, there is being a reshaping. So some of the funds, so what it means is that some of the funds in the stock market are being moved away from stocks and into other assets, in this case gold. So this is the example, for example, with gold and the S&P 500. If we look at other assets, so for example, if you invested in stocks and shares, would it have been better to be invested in the S&P 500 or in the Nasdaq? And again, let's go into like a weekly chart to. Oh, where's my window gone? Sorry. So this chart here does exactly the same thing, but it tells slightly different picture. So between the Nasdaq and the S&P 500, between 2003 and now, we've gone from an index of pretty much like 1 to 350. So the Nasdaq has performed over the last 25 years, roughly 24 years, has performed 3.5 times better than the S&P 500. Okay, so apart with a notable, the drop between 2000 and basically for 1 year, 2021 and 2022, for the rest of its history, the last 25 years history, the Nasdaq has been performing much better than the S&P. Now, going into different asset classes, because as an investor, we generally have, there are three big asset classes investable. If we take, crypto out of the equation for now, but the three big asset classes that we can invest in generally are kind of like bonds, stocks, and commodities. Okay, so if we go and have a look at bonds here, and we look at the AGG fund, which is an aggregate fund. It's an aggregate ETF of all type of bonds. Okay, so government bonds, company bonds, municipal bonds, etc., high yielding bonds, etc., etc. A little bit like the S&P 500 for shares, the AGG is the similar thing, but for bonds. And again, we look at the comparison to the S&P 500. So it tells you here that again, from roughly 2009 to the current day, we have been in an extended downtrend. So stocks have performed much better than bonds. Okay, but again, similar to what we've seen with gold. Let me go in a weekly chart so you can have a look. Where's it gone? Okay, what we're seeing right now, as you can see, a similar pattern that we saw before with gold. Just make it bigger so you can see a little bit better. So a similar pattern what we're seeing with gold, we've got the start of a turnaround, and there's a couple of points of interest. I'm watching this with interest again, because an extended move above this point, especially if we start seeing kind of like a swing taking place, well, something like this would indicate that there is like big investors. We're talking here about mutual funds, investment funds, pension funds, etc., are switching away from stocks and moving funds into bonds. Okay, because at the time when there is uncertainty, where they're not quite sure if the stock market is going to produce the returns that they want, they'd rather be safe than sorry. And because they have to be invested, because mutual funds, pension funds, in their statute, they have limitation on the amount of cash that they can hold, so they can't just sell all their shares and just sit in cash. They can have a maximum generally about between 5 and 10% of cash sitting on their assets under management. They need to be invested in something. So he has other bonds, stocks, or the other thing that they can be invested in is commodities. And this is a similar, oops. So this is Thomson Reuters Commodity Index, which is again an index of all different commodities, so metals, oil, agricultural commodities, copper, silver, gold, platinum, and everything else. And again, if you see this ratio, oops, sorry, didn't mean to do that. How do I do this? Let's stop. Just want to cancel this thing. Okay. So as you can see, as we saw for the other asset classes, again, from all the way from, so basically after the big financial crisis of 2008, this stock market has performed a lot better than commodities. Now, as we already saw with gold, obviously gold is one of the commodities as well. Um, things have been pretty much equal if we go all the way to the pandemic from 2020. Okay, but there has been another minor downtrend from 2022 to the present day that now has started to turn around. What we can see here at the bottom, between November of last year, the commodities have started going up in price. You would have noticed this, not just in gold, but other industrial commodities like copper, for example, is at an all-time high. And many other commodities are hitting new highs. Now, this is slightly different though, because yes, we'd be looking at a break at this point to confirm that we at the very least interrupted this downtrend. But literally what we had since 2002 is a move, a sideways move really, because this is a minor so the initial downtrend was terminated by this move, and then we started another move down, but hasn't been like strong enough to create a new low. Okay, so it's a minor downtrend, and literally until we break this, we can be sure that this is not just a like a temporary blip, and then we carry on going lower, or if we're gonna have a time now where the market changes and commodities are gonna be a lot stronger than stocks. Now, the reason why I'm telling you, because it's like, if we go back to a very long-term chart, like the S&P 500, so the bear market can last a long time. We've been used here to this kind of luxury that since 2009, that pretty much the stock market has gone up uninterrupted, for 15 years. But if you look at the past, when we had the previous bear markets and like the crisis in 2000, the market dropped 50%. But not only that, but it took how long? 13 years for the market to go above the level they was trading at in 2000. Okay, so don't take it for granted that because the market has been going up by 15% a year, it's going to carry on doing that indefinitely. And I just wanted to play this little game with you for a second, then we'll move and talk about something else. So this has been how deep can the bear market go? There's a 51% drop. Actually, the low was 57% drop from the high. This one is very sharp. In 2020, with the pandemic, was 38%. And the latest one in 2022 was 27%. Okay, so if we measure from the top that we hit in February, and we measure these three drops, where would they take us? And this is where I take you to kind of like why everything is already written in the chart, guys. Okay, so the levels I would be watching. The first of all was, remember what, 27%? Okay, where does that take us? To this demand area. It would take us 25% with this demand zone where we might have some capitals waiting to be invested again in the stock market. If we have a deeper move, 38%, we said, okay, 38%. It would take us here. Another zone that could still be considered a zone of demand. And where would the 50, what was that, 55% take us? 55, 57. Would take us down to this last, what we call a rally, a rally base rally. Okay, because the market rallied, then it stopped for a while, and then it rallied again. Okay, it will take us pretty much to this area here. Oops, no, not that. So this is as low as the possibilities of if we continue with this down move, and there is kind of like a worrying moment here, because at this point here, this is the low when there was the latest retracement, which was in October, and we are now trading well below that point. And we've tried during this month, we tried to go back above that point, but there wasn't any sustained energy in that move. And if we close this month below that, then this will be the next stop. Okay, and again, you remember last year when we were talking about this, I said that towards the end of 2024, if you remember, I told you that the fair value of the stock market at the end of 2024 would have been between 4,600 and 4,800. Okay, then the market performed a lot better, but many people in the market considered this to be now overpriced. So a move of 27% down from the high will take us down to about that level, 4,600, 4,500, which is not a big drama, because if the market, instead of going out this strongly, had done something like this, it would have been just what people expected last year. Okay, so it wouldn't have been anything strange. So that would be perfectly normal. These other drops would be obviously a bit more dramatic, because 55% drop, it's panic in the streets, but they are within the realm of possibilities. And this is why I'm telling you, guys, start looking at your portfolios and start being ready that some of these things can happen, and make the adjustments that you need to make, because as I said, it's better to be safe than sorry. And and crypto is part of this as well. The difference is that if we compare it to where's my comparison chart? Yeah, if we compare Bitcoin to the stock market, and they're always being accused that Bitcoin is very volatile, okay, which obviously it is. This is the relationship of Bitcoin to the stock market. Okay, so obviously this was the latest bull market, and but if we even at the lowest points, if we kind of draw we can see the direction of travel. Kind of in this case, Bitcoin has performed a lot better than the stock market, even if the stock market has been growing at an incredible rate. Here from 2022 to the present day, we've gone from an index of 4 to now we're about 16. Okay, so basically the Bitcoin, if you invested in Bitcoin instead of invested in stocks and shares, your capital would have grown 4 times as much. Okay, would have been worth 16, let's say, instead of 4. Okay, just to make you realize how Bitcoin is doing. Now, I've spoken, I think, long enough. It's time to bring Jonathan in. This was due. Sorry that I spent this much time, but I think we had to spend a little bit of time in having a look at the impact of Trump's announcement. Jonathan, sorry, there is a question from Eric. Go ahead, Eric.
Yeah, thank you. What you're saying, would you sell some cryptocurrency now before it drops?
Sorry, say again.
What you were just saying, would you sell some cryptocurrency now before it might drop even further?
No, personally, I wouldn't. No, I wouldn't, because again, it's considering what cryptocurrency is doing now, and what, especially Bitcoin, we're talking about. So it's like a change in use of Bitcoin over the past 2 or 3 years, where it's become more of a commodity, especially this year, since we had the ETFs being launched. So there's a kind of a difference in news, becoming more of a commodity and less of just a speculative item. So in a way, it's being seen more and more as an alternative to gold, more than just being a something for degenerates, that to invest and become millionaires overnight. And also other crypto projects and this is what we're going to talk about with Jonathan as well in a minute. I'm now doing a lot more things that I've got to use in the real world. And so again, we are talking about a technology that it's becoming one of the next dominant technologies together with AI for the next few years. I personally wouldn't, but obviously it is an investable investment item that is considered risky. Okay, so
I'm not talking of projects like Cardano or whatever, which we're going to talk about, which has a different meaning. And crypto is probably more, it's like gold. It's gold, yeah, gold is at the top. So sell gold, or crypto might drop and buy again later on. That's what I meant.
yeah, well, we don't know that obviously. If you don't have we don't have a crystal ball to say exactly when things are going to happen. But the one thing that will, so all risk assets react to, um, react to the amount of cash that's in the system. So as we're going now from monetary tightening to control inflation, to monetary easing again, so reducing interest rates. This will introduce more cash in the global economy, and that will then spur a growth of all risk assets, including crypto. And the interesting thing to see as well in this past few days, we're seeing kind of like a little bit of a decoupling between crypto and stocks and shares. So it seems to have, I mean, and this is just like observing over the past, literally over the past day or so. It looks like there is a little bit more of a spine now that's holding up the price of Bitcoin than stocks and shares, because stocks and shares is like the big mass. Let's say everybody's making a lot of money, and what the mass does, and normally they get in right at the bottom when it's time to sell, and they provide liquidity, for the people that are bought a long time before, and they're ready to sell to the masses. Now, this hasn't happened with crypto yet. Okay, so I personally wouldn't, but then kind of like it's your decision to make. I'm still waiting, by the end of this year, to see a marked increase in the amount of capital that's in the crypto markets,
Okay.
to hit a new high overall. Now, what we're talking about with Jonathan last week is like how to do things in a blockchain. Kind of like one thing that we didn't have time to talk about was, okay, if we were so now if we have to sign a contract, we physically or electronically go and sign a document, and then certain things happen before, and generally there's a solicitor being involved, etc., etc. Now, how could we do that if there was like a contract of sale, if we wanted to sell a car on the blockchain, or or we're not going to property because that will require certain things to be organized by the state as well. But let's say if you wanted to sell an item and making sure that the transfer has happened before we release the goods, how can we go about in the blockchain, and how could the process be better than what we're being used to right now?
Yeah, so there's a lot of utility that would be useful to have just around these sort of contracts, and they're typically escrow contracts, where you've got two parties who want to get involved in some kind of exchange of goods, buying asset, selling asset, and in the real world you'd have a trusted third party sitting there, waiting to take hold of the funds. So, like when you're doing a house sale, you've got your conveyancers who do the checks on the property, see if the goods are all right. You've also got your solicitors for each party who are um, involved in checking that the other party are doing what they say they're doing, that the property is all good. And when it comes to actually transferring the assets from, the asset paperwork from one to another, you've got two sets of solicitors involved. And this is all done on every single house sale that goes through all the time. So the expense, manpower, searches, the data access is all repeatedly done over and over again every time a house is sold, which seems to me just to be crazy. So if we could replace that with an escrow contract that was written into the blockchain instead, then we'd save on a whole load of effort and paperwork. Efficiency being the source of the biggest cost, or lack of efficiency being the source of the biggest cost in human interactions. So there are escrow contracts in crypto space that take away a lot of that effort. If you've gone through the process of validating something is true, then you can rely on that data in perpetuity, so long as the underlying stuff hasn't changed. And so why don't we have that information available in each of our sales and purchases? When you're transferring a house to the ownership of somebody else, you've got the deeds on one side of the deal, and you've got the big pile of cash on the other. And the mortgage companies are the ones who tend to be putting the money up and moving it around. If that could all happen instead of having to involve mortgage companies, two sets of solicitors, just have one contract to do it. And so that's what the future really is, as we can see it. So you've got several different teams who have built out smart contracts that will do escrow type contracts. I haven't used one for a peer-to-peer sale directly yet, but I can see that embedding one, if I wanted to build an escrow contract into an app that I was developing, is pretty straightforward. So let me just get a screen share up now, and I can show you some of the tools. And really, this is the most basic kind of contract that people want to get involved with a smart contract.
In a way, a kind of like an escrow account as well is like a peer-to-peer transaction on, using something like Binance or something like that is, it's probably the simplest type of transaction you can imagine.
Yeah. So, like within Cardano, you've got programming libraries that help you develop contracts. This one is developed by a community team, Mesh, and they developed lots of a sort of JavaScript framework for building out your web apps. And in here, you can see the code required for writing an escrow contract in Mesh. And it's like, I don't know, 20 lines of code. So you've got a very shallow footprint of code to actually go in and audit that it's doing what it says it's going to do. And so with any sort of level of skill and ability, you can really understand what this is going to be doing. And that means it's very good for, you're capable of auditing your contracts. And when you're going into a contract, if you have some level of understanding, then you can check it out yourself, or you can get someone else to check it out for you. And these libraries of smart contracts are built up, put onto the blockchain. And once they're on the blockchain, they can't be edited. They can't be changed after the fact. And so you've got that assurance that if you've had 5,000 sales go through using this smart contract in the past, then you know that likelihood is they're going to carry on in perpetuity now, being able to do that same job of holding reserves in one side, holding payment in the other, and then managing that swap of goods between. So they normally have a demo button here, but I think that's for meshing, minting tokens, not escrow. Here.
So for example, this escrow could be used to, if you wanted to sell an NFT peer-to-peer.
Mm-hmm. Yeah, exactly.
Talking about things on the blockchain already, without making it more complicated with, real goods. But
this is trying to actually I think probably this is not using mainnet. So I need to switch my wallet over to the DevNet. Which I don't have set up in this wallet, I don't think. I'm gonna have a quick check. I'd actually forgotten we were going to look at escrow today, Lucas, so apologies.
Right, no, don't worry.
No, on previews, on pre-prod. No, I haven't set this one up. So we can't actually run the demo of this code snippet. But if we
All right, we
jump
can
in-
explain it. We can explain it in words, even if we can. We can do this another time. But we can explain it in words. Basically, this what this just for example, if you were to sell a car.
Mhm.
Okay, so on one side you have on one side of the contract there is the person that agrees to buy the car for X amount of money. On the other side of the contract there is the car and there is a controller who says yes, the car exists and it's got four wheels, tick, it's got an engine, the engine has got a belt that was changed last month or something like this, and all kind of conditions then agreed and controlled. And then when the two parts of the contract are satisfied all the conditions of the contract, then the exchange takes place.
Mm. Yeah, so if you're doing that with an NFT or something like that, which is a digital asset, it's all on chain, you've got that's the sort of the easiest way of getting involved in these swaps, because you place the asset, the NFT, into a smart contract that sits then locked away from both parties. It's left. So when you're a participant in the blockchain, you have a wallet that gives you the right to change portions of the blockchain, and only your wallet can change the portion of the blockchain that you have access to. Then you have the other party's wallet; they can do the same with certain parts of the blockchain, and then you've got a smart contract, and in Cardano that sits on the blockchain itself and acts as it has an address that you can send things into. And so if you've got two parties want to swap an NFT between them, party A has the NFT, places that into the address of the smart contract. And as it does that, the signing keys for the wallet A is has the only one that has the ability to change what happens with that that NFT as it goes into the smart contract. The smart contract has got certain rules. So up on screen now, I've got the set of rules around this contract. That's a template from Marlowe, which is a smart contract framework written by the IOHK team. And it's now actually a community project. Conditions are you've got the price of the item in Lovelace. Lovelace is the small denomination of ADA. So you've got 1 million Lovelace per ADA. You've got the seller, wallet A, the buyer, wallet B. And then in this case, we've introduced a mediator. And that could be, so say I was sending an NFT to Eric, and we want, and it, that NFT actually represented some real world value of, I don't know, maybe it's $10,000 investment opportunity that we're participating in. We could actually ask Luca to sit as signer on that smart contract to actually trigger it one way or the other. So I could say I'm putting my NFT into that escrow contract. The person who's allowed to sign it is the mediator, and it can only be signed once the funds have been put in by wallet B. Then Eric takes his funds, puts them into the smart contract that represents the value of the NFT. And in an automated smart contract without a mediator, that as soon as that payment into the contract happens, then the NFT will be sent out of the smart contract into Eric's wallet, and the funds will be sent out of the contract into my wallet. And so we've done that swap between us. If we've got a mediator involved or third party, that could be Luca in this case, he could say, is the asset, the NFT that's been placed in, actually the one that Eric was interested in buying? Have I done a switcheroo? or if it was not an NFT on chain, if it was actually a real world asset, Luca could go around to my house, have a look at the car, kick the tires, and then say, yeah, looks like the car we were talking about, Eric. And he could then trigger off his part of the smart contract, allowing the funds to be placed in and the car to be moved out, etc., etc. And so you've got this very basic setup, composability setup for bringing together smart contracts and in an escrow type way. So yeah, the interesting thing about Marlowe is actually it's a drag and drop framework, so you don't even have to be able to code to use Marlowe. You can go to a user interface that lets you pull blocks of the component from any of these smart contracts that are available, and which, if we look here, there's escrow, forwarding contracts, futures contracts, options. You've got raffles, all of these things that we look and get involved in terms of stocks and shares, trading, commodities, bonds. All those are actually available to be described in smart contracts. And once you've got them in a composable format like this, they've been written, they've been placed on chain, we know how they work. Then the applications that you want to build to be able to use those smart contract components, you can just drag and drop on a web user interface into the structure that you want. Yeah. Do interrupt me with any questions. I'll maybe try and get the Blockly interface up and running.
From Brad, what is a raffle? Well, if you holding a raffle on the blockchain, I imagine, Jonathan, yeah?
Yeah, exactly. So, for example, if I wanted to run a promotion for my stake pool and I was going to raffle, I don't know, an hour of Luca's time. So if you want to stake with my pool, so there's 50 people who want to stake with the pool and are all interested in getting an hour of Luca's time, we could create a raffle contract where Luca would be beholden to giving up an hour of his time to anybody that wins the raffle. The contract conditions could be you have to have been staked to my stake pool for 5 epochs, and epochs 5 days. And then the raffle contract will automatically pick anybody who's put in their deposit, a 5 ADA deposit into that contract, has actually staked with my pool for 25 days. The contract will randomly pick someone out as the raffle winner, and then Luca's beholden to spending it out with whoever wins it.
Yeah. The difference, Brad, is that this is all like done, without trust. So the things are done in the blockchain. They're done, so we trust the code rather than trusting a person to deliver. Like if everybody paid $10 and the winner of a raffle wins a sports car, so 1 million people buy a $10 ticket, whatever it is. Then you still have to trust that person to deliver the sports car. In this case, you don't, because it's already in the contract and executed automatically with the condition that you set in the contract. So it's really, really interesting. Jonathan, we can carry on this another time, I think, because I think this is really interesting. I need to stop the call now because I've got calls starting, coaching calls starting straight at 10 o'clock. But definitely, guys, if you found this interesting, how would you think about continuing this conversation another time? Because I think it's making it a little bit more. If you stop sharing now, Jonathan, making it a little bit more real about, we're talking about crypto all the time, but almost like it's something that's out there and we don't quite realize what it can do. So bringing it down to people and thinking, okay, you can actually use this in your own life. Even explaining to people how does a peer-to-peer transaction work, for example, because there are things that can be done even on exchanges. Like Binance has a peer-to-peer network as well that you can buy and sell cryptocurrency without Binance being involved, apart from being the mediator, for example. So there are things like this that we can already use every day, and in things that we do. If we run a club or if we have other things, we can already use the blockchain to improve some of these things. It's just a little bit of know-how that Jonathan can provide. Thank you very much. can go a long way. Thinking, oh, I didn't know I could do that. Now I'll try it and I'll play around with it. As some of us have done, and it's it's actually this is the start of it. Okay, so
Certainly.
guys, I will wish you all a fantastic weekend, and we'll catch up with you all next week. Hopefully, it will
Thank
be
you, Luca. Thank you, Jonathan.
no problem. A little bit less of a traumatic week from the point of view of economic announcements. I really hope that we'll see. We'll see what happens. Keep your eyes peeled on the market. And today could be another catalyst for a big move. But get ready. If you're invested, don't put your head in the sand. But do have a look at your portfolio and think long and hard about where you should be over the next 12 months or so. All right. So
Thank you, Luca.
again, see you next week, everyone. All right.
Thanks, guys.
Thanks, Luca.
Bye.
Bye.